Good morning, everybody. Welcome to another Morning Coffee with Mike. Now, today's question came from YouTube. Somebody wanted to know about retail investing and how stocks could be manipulated versus how you start to see like wild and whippy action in these kinds of stocks. And the example that was asked about was a stock AI. So how can you avoid it? How can you handle these wild and whippy stocks that tend to be manipulated that everybody is talking about? So let's take a look at this example here. Was AI. And so the first thing that I did with AI was I had it on this chart, and you could see that it had a big run up from the lows, consolidating around here. Something that I look at on all the trades is this indicator down here. And what that is it's the percent daily range. I don't know if you could see that percent daily range. So if I scroll my mouse over to the most recent action, you can see that this thing is moving at about 13.5% per day. So one of the criterias that you need to figure out for any stock that you're going to trade is the level of volatility that this thing has. Does it have the level of volatility that works well for your style? For me, that's way outside the level of volatility that I want to deal with, at least for the entry, right? So now let's talk for a moment about entries. When we're looking to enter any trade, I find it important to set these three things up ahead of time. I want to know exactly the price that I want to enter at, the price where I want to cut my loss at, and the price where I'm going to look to take profits at. I want the difference between the entry price and the stop loss to be anywhere between about 5 to as much as 10%, but 10% is on the extreme side. Most of the time, I'm setting stops at about 5%. So if I'm finding a stock like this and I need to place my stop, let's switch back over to this chart here. So if I'm finding a stock like this, and let's say I wanted to get in at that high and just yesterday's low, right? Yesterday's low. The difference between yesterday's high, yesterday's low is about 12%. That is going to be too wide for me. Now, you need to take a look at your systems, your styles, and figure out what's the proper volatility for you, but that's one thing to look at and one way to avoid wild and whippy action. And just because we hear things on social media doesn't mean that we should be jumping into these stocks. Another way to start to filter out some of these trades, some of these ideas, is by looking at the actual fundamentals. And I'm going to bring over another tool that I like to use. It's called MarketSmith. And I'll show you this one here. So same stock, right? Ticker AI. And here's what the company does. They provide services to build enterprise scale AI applications for organizations in data intensive industries. Great. It's actually not too thinly traded. It's trades at about 14 million shares per day. It has the market cap. That's on the smaller side at $2.5 billion. Let's see. Well, what else can we see on the stock here? So something that I like to look for is this right here. How many funds own this thing? And I'd like to see this number increasing over time, right? So, and the reason for why I want to see this number increasing over time is because it's the mutual funds, hedge funds, the big institutions of the world that are driving the price. So if the fund ownership is going up over quarter, then that's something that'll help drive the price. The big institutions can't do all their buying and selling in just one day like we can. It's going to take them a little bit of time. So seeing this number go up over time is good. And right now, this is kind of wonky, right? It's down one quarter, up the next quarter, down the next quarter. Don't really love that. Doesn't have any earnings yet. Earnings are all negative. Sales are they're positive, but they're declining, right? So you see the change quarter over quarter is going down. That's another knock against it. It is a recent IPO, or relatively recent IPO. It IPO'd in December of 2020. So some of it you could give a little bit of leeway to. Another general rating that I look at is this composite rating. MarketSmith takes a lot of the fundamental data. They cook up a composite rating. Generally, I like to see that number over 90. 75 isn't that great. What else? Oh, this over here, right? We were talking about fund ownership. Something that's a quick and dirty way to find out if there's good fund ownership is to take a look at this IBD Mutual Fund Index ownership. So something that Investors Business Daily does is they will rate the funds that are out there, and they'll track certain funds, and the funds that they track, they'll put in that box. There's none of the funds that they track are interested in that. Makes you start to question, well, why? So bottom line is to have a process by which stocks will make it onto your radar. Because if you have a process, if you have a system that says that I'm only going to trade stocks that meet X, Y, and Z criteria, then that filters out 99% of all the noise, right? Because for me, this stock that was brought up, AI, wasn't even on my radar until it was mentioned. So the same thing goes for social media. The same thing goes for the news. The same thing goes for anything else. Have a set criteria for what you're going to be interested in, and that'll eliminate much of the noise. So all that stuff said, let's see what questions you guys have and what else you want to talk about. Let's see. Question from Ahmad. Which website you use for fundamental analysis? So the one that we were just looking at is MarketSmith. This is a subscription-based website. It's a screener, and it gives fundamental data like what you have over here. I use it primarily for screening purposes. You can see that I have a bunch of daily screens that I run. Today's Friday, so I'll be running these weekly screens, and you could set up all different kinds of screens for yourself. Makes life a lot easier to filter down on the different fundamental characteristics, the different technical characteristics. But I do pay for that. The more you get into trading, the more it becomes something that you're going to generate an income from. Time saving starts to become a lot more important versus if you're just getting your feet wet, then you probably wouldn't want to spend that kind of money on something. You could still find information like fundamental information on a website like investors.com. You could put in the tickers one at a time and it'll spit out some of the fundamental information. They're a good spot to get started. That's probably the best spot that I could think of. Even, TradingView is starting to come up with some fundamental information. Like if you go over to this spot here on TradingView, right? So I still have AI up. So if we expand this over here, you could start to see some of the stats. You could click on some of these spots. They've got earnings. Let's see if we could expand any of this. Click that. Oh, that's looking at all the different tickers there. But yeah, you could start to see some of the fundamental information over here on the curve. Gives you some information about the company. So basic fundamental information like that you could get on TradingView as well. But for me, I like MarketSmith. It makes life a lot easier, at least for the screening part. Let's see, what other questions do you guys have? Yeah, Tesla's stock has been on fire lately, coming up off of the lows. Bring up Tesla. Take a look at Tesla. Yeah, so this was one that bottomed, rallied, and then just broke out and ran for about 100% there. That was a great move. Yeah, unfortunately missed that one. Had a few others on the radar though, ones that have been doing pretty well in the group. Well, let's see. Well, what are some of the ones that I've got on here? Got Steel, got Fortinet, SRAD. Yeah, most of my holdings here, I'll show you what I've got. Most of them are just floating around the buy point. Just starting to break out. This one's pulling back a little bit. This one reversed. And this one here just floating around the buy point. Something, and here's a few from the watch list. Something that your watch lists can do a great job of is giving you insights into the overall health of the market, because what you really want is not just to know what the major indexes are doing, not just to know what people are saying on the news or in social media, but the stocks on your watch list. If you've curated and you've screened for certain things, right? You've built your system, you've built your process, you're screening for certain things. That's going to give you the stocks that fit your criteria, right? So if the stocks that fit your criteria are doing well, then that means that it's a good time for you to be participating, right? If the stocks that you're screening for are getting smashed, then it's not a good idea for you to get too invested in the market. So therefore, your watch lists provide you some of the best insights into market conditions, at least for your style. And that's what I like to focus on. That's what our students like to focus on. That's one of the things that I talk about in my new book, The Trading Mind Wheel. And you can actually go and pre-order that. It's on Amazon, it's on Barnes & Noble, it's on Target and Walmart, all those places. Just search for Trading Mind Wheel. Or you could click the link in my bio and get a whole bunch of bonuses with the pre-order of the book. Let's see, what other questions do we have here? Scroll. What indicators do you use for weekly options? So I'm not trading weekly options, so the answer is none. But the indicators that I have here on these charts, flip this back around. I mentioned this yesterday. So down here, that's the percent daily range. It's just telling me how volatile the stock is. This line here, that's the relative strength versus the S&P 500. It lets me know if the stock is a leader or not. It also lets me know if price is outperforming the relative strength or vice versa. Generally, I like to see the relative strength outperforming the price action. Let's see, well, what else? A few different moving averages on this chart. Up here are the stochastics, and that's really all that I look at. Not that much, but the main thing, I think indicators are great. What you want to learn is, what you want to do is to master the indicators that you're looking at. So don't dabble in indicators. Don't just throw random ones on one day, different ones on the next day. Keep the same ones on your screen, and then you'll start to pick up certain nuances as you go, just because they're on the screen all the time. Nuance that I picked up about stochastics, that's the newest one. I started looking at stochastics maybe about a year and a half, 2 years ago. What I started to pick up was when stocks start to break out of the patterns that I'm interested in, the stochastics tend to be in that overbought level. And I believe I mentioned this yesterday too. A lot of people look at the stochastics and say, oh, it's overbought. Let me try to short this or not bother with it. What I found is quite the contrary, that for my style, seeing that, it's a great confirmation. So that's what I mean by putting the indicators on your chart, learning to master it, and being consistent with the indicators that you are going to use. Let's see, well, what other questions you guys have? Let's see if I could find one more question in here. We're about out of time. Let's see. Tickers that I'm interested in. So the tickers that I'm interested in, I actually do an analysis, and I give out the stock that most interests me for the week ahead in my newsletter. So every Sunday, I send out a free weekly newsletter that gives education. It gives a stock that I'm interested in. But I'm not just saying that, oh, here's the ticker. I'm giving the entry, the stop, the target, and I'm telling you why I'm interested in this. It's very similar to the information that I would share with our elite program members, and I'm doing it not to tell you go buy this or buy that, but as education. So that way you could see the thought process behind, well, why is this interesting? And so that way you could take bits and pieces from that type of a plan and say, okay, how can I make this work for me? And that's really the idea behind it. So my recommendation would be to hop on the newsletter. Click the link in my bio. There's a link to my website, marawealth.com, and you could go hop on the newsletter. In fact, the best thing to do would be to go to that homepage, put your email in, and you'll get our free Trading Mind Decoder, which is a guide to help you unlock your mindset. So go do that, and that's it for this week. Time flies when you're having fun. Hopefully you guys got a lot of value from this. And if you'd like to be on an upcoming Morning Coffee with Mike, just click the link in my bio, or if you're watching the recording of this, click the little Calendly link that I'll include in the description and book a time for yourself. We do this Monday through Friday at 9:30 a.m. Eastern. I'll see you guys next week. Take care. Much love. Peace out, everybody.